Well, I was invested in everything. Stocks, mutual funds, you name it. We would get monthly reports. Things were growing. Everything was growing. In the 90s, you could not lose money in the market, even if you were a dumb investor. I mean, it just kept growing and growing and growing.
Economy was doing great. I mean, you had all kinds of gains in the stock market. That was kind of the dot-com era. You really didn't have to pay attention to, you got your statements at the end of every quarter and you were making money.
It was exciting because gradually over time, we would have a day where we would make $7,000 or and as much as $30,000 in a day as it built, and even more.
In 1996, we had doubled our money. We had almost 500,000.
Steve Shulo and Dan Robertson believed they were headed for early retirement the day their portfolio topped $1 million. It was November 11th, 1999.
Oh, that was a very nice day that day, wasn't it?
What happened November 11th?
See, it's when our portfolio went over $1 million. So
Oh.
that was just amazing. It was like, well, yeah, this is how investments work. You invest it and it grows. I mean, that's how I thought about it.
It was a manic Monday in the financial market.
Stocks plunged.
Traders are standing there watching in amazement, and I don't blame them.
But in the spring of 2000, the market collapsed.
Say a lot of their customers are freaked out.
We did not know. This is our mistake. We didn't know it was a bubble. We just didn't know. Our portfolio had gone all the way down to where it was in 1996, from 1.5 million to 500,000.
460, I think.
All that was gone.
It's like, holy smokes, how do you stop the bleeding?
The reality of what you've lost is huge.
Right.
I mean, not only have you now lost half of your 401k.
If it took 13 years to accumulate $80,000 and 1 year to lose half of that, and then try to get that back in another 13 years and only be at the $80,000 that you were 13 years ago,
The math doesn't work.
the math doesn't work.